All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital. We're coming at y'all live as usual every Friday here around 11 a.m. Central Standard Time. I'm coming out of Houston, Texas, and you are wherever you are else in the world. And so today we're going to talk about what happened this week, right? So we had the huge crash. We say huge crash, right? This flash crash thing kind of happening there on Sunday night, coming into, for the weekend there, coming into Monday morning. And then we've had a big rally off that. And so was that the shortest recession ever? What's going to happen with price now? And that's what we're going to talk to you about today. But before we do me a favor, hit the like button, subscribe to the channels, follow me on Twitter or Facebook or wherever you happen to be watching this at Twitch, and get it out there. And if you wouldn't mind, go ahead and share the link to the video as well. Because again, that helps all with the algorithms and gets more people to see it. And if you like what I do, and if you like what FiboSwanny does, then we would appreciate that. Speaking of FiboSwanny, there he is. What's going on, my man?
What is happening? I'm coming live from the woods of Kentucky. How's that?
All right, is this where the banjo comes in?
No, everything's going well. It's Fibonacci Friday. If you follow me on X, I always throw that out on Fridays. Just spiral into a good weekend. So I wore my Fibonacci shirt. It's got some spirals on it, some symbols. Kind of crazy,
Getting all into the mood there, huh?
Yep. Yeah, getting into the mood.
Yeah. So
everything's going well.
Yeah. So before we get into the charts here, obviously, you and I have been around a while. We've been in the markets for, a few decades here. Coming into Monday was interesting, right? We had the big flush. We had a big move down pretty quickly, potentially partially driven by the carry trade unwind, the yen carry trade unwind. Now we've got a lot of people talking that's probably, $4 trillion or more. And I'm seeing other people talk about maybe it might only be like $500 billion. Nowhere near.
I heard like 20 trillion.
Yeah. See, lots of things going out there, but here's the important thing, right? And this is, if y'all haven't been following me all week, I've been on lots of shows this week talking about this. But the first thing I looked at, as far as is this legit, is when New York opened on Monday. When the New York stock market, finance opened on Monday, did we get a sell-off? No. And so the way we kind of look at this is when you're in TradFi markets, which are closed on weekends, and you have some big, huge weekend event like this, and it seems kind of significant, but there's no follow-through. The minute the market opens, there's no follow-through. And instead, price, had continued to rally back up. That's usually a pretty good indication. It was more of, in technical terms, what we would talk about on the charts as a shakeout. Instead of some big fall through. That doesn't mean it can't continue lower. But, again, as we talk about all the time, trading is really about probabilities, right? Not about possibilities, because anything's possible at any time. Anything's possible at any time. The only guarantee in trading is you're going to lose money from time to time. And the newer you are, the more money you're going to lose and the more often you're going to lose it. That's the only guarantee in trading. So, we look for that. We've had the great rally up here. We closed back above the Monday swing high, which is important because it was such a large candle with such a large volume on all these different kind of platforms, but especially with Bitcoin here, we've rallied up into the daily pivot. So we're going to talk about these charts here. So Fibbo, let's go ahead and jump in there, man. I know you're a little bit limited for time today, but we'll go ahead and let you jump in there.
Yeah, sure. I got a few different time frames on Bitcoin to take a look at. I'll start with the hourly because there's a few people in my group that trade the hourly. I don't. I use that as a guide, but if they're trading it, they're doing all right at the moment. What happened here on the hourly back on what was it, July 29th? We went into the bear zone here, and as you can see, we were in the bear zone for a long time here. Worked its way down. It hit a couple different targets. The first target that we were looking at was this 54,820, and that target hit right about in this area right here. And then it went down even further, wicked all the way down into this next target. The actual target was up a little bit higher inside this range, but it definitely hit it. So you would have bought, and then you would have bought again while in the bear zone. But one of the things that I like to see when it comes to my zones is when the RSI dips down below the actual bear zone and then comes back up in it. So when this comes back up like this and on falling bear momentum, I like to see just basically as a confirmation that buying interest is starting to come back into the market. So the buy here and the buy here, you'd be averaging, probably right in this area in here. And then we went into the bull zone, and then we hit the first target at 67.90. So if you bought these two, you would have been selling back at this point. We kind of traded up a little bit on it, and then we're starting to come back down a little bit. We're still in the bull zone. The bear zone right now is at 59,265, which is basically right at the 61.8% level. So I wouldn't be surprised if we kind of test that and then start working our way back to the back to the upside. So if you are long that market, the next target is going to be 68.1, which is the 100% of the start of that threshold, and then somewhere between 73 and 76 if it wants to continue going higher. So if you're on the hourly, everything's looking decent as the areas to buy while in the bear zone, because a lot of times that gets a little scary, when everything's starting to crash and it's like, oh my gosh, I got to buy. And the key to it all is, you do want to buy in the bear zone, but like Chris and I were just talking before we got on here, risk management is really the key to it all. And you'll see that when I look at some of these other time frames of buying while we're in this dip. But then again, there's a line in the sand that if we do go through that, then of course all bets are off. You want to take your loss and move on. But right now everything's looking pretty good when it comes to the structure I like to see. And of course I stick to my strategy, which takes the emotion out. So when it tells me that you hit a target and you want to buy, then it's time for me to buy, because I trust my system because I've been doing it for a while. So, which is sometimes really hard to do for new players coming into this thing. It's like, to have that faith and I'm not asking everyone to have faith in my system, but when it comes over time, you'll kind of get more comfortable seeing it kind of work its way out. Because long term, it all works out really well, but sometimes, you'll take losses here and there. But that's the hourly, nothing crazy on that. And we're just gonna kind of see if we get some buying interest in here to keep us in that bull zone on the hourly. And right now the ADX is dropping a little bit, but the green positive is still elevated. So everything's looking pretty decent on a little bit of a throwback. You could probably almost put like a trend line in here just to kind of eyeball it like that. So you get a little breakout and a little throwback to the breakout point, which is right there at the 61.8% level. So both of those together should find some buying interest. Hopefully we find it before it even gets there. But if we get down to that 59 and 59.3 area, I wouldn't be too concerned with that. But of course, if we get back into the bear zone, that could be a sign that we're going to be kind of flipping back and maybe going a little lower. But on the 4 hour, I cleaned this chart up, but there was also a couple of other buys in the bear zone in the 4 hour, just like there was the hourly. I don't know if I have I just got my trades up here. I'm actually 40% long on BTC. So I had a buy at 64.1, 58.3, and 52.9 that all hit on my limit orders based on where my spots were. And then we just went into the bear zone or the bull zone on the 4 hour. So I bought a 61.4 going into the new bull zone. So that's where I'm at on that. So since we went into the bear zone here, we're coming down a little bit. We're still well into the bull zone. This one can go all the way down to 56.1 before that kind of switches over. But same kind of thing, this trend line, you're breaking out, maybe coming back and down and retesting. So what this leaves me with is I got a couple buys down here while in the bear zone. And again, you got that same kind of thing. I hate when those things come up like that. It's a pain in the ass. But you get the little drop in the RSI, and then it comes back up out of that, or comes back into the bear zone on those nice little accumulation wicks there on the bottom. So I like to see that. So a couple of things. The 100% level at 66.868 I'm looking at this trend-based extension here, which kind of gives me this 127 to 141 range, which puts that 100% in there. So that's going to be my first take profit target off of these buys that I had down here. And then, of course, the next level is going to be the 127 to 141. It gives us a range between 71.7 and 74.2. And if you take this extension out, this 200% falls into this range there. So that's going to be my next target for a take profit at 72.1. I always like to do the trend line breaks too. And I take that measurement. So I'm going to actually take some profit at 76.3 on another one of those. And of course, I'm 40% long at the moment. So it's 10% at each one of these levels that I'll take profit on. And of course, if we break back to the shallow fib, so in case if this goes up to this point and hits that target for profit, then my shallow fib will be 63.9. So if it actually comes down to that point, I'll actually buy more and keep that trend going. But at the moment, I'm long at a level I'd like to see. Since we bought in the bear zone and it went bull, I'm actually in a good average to kind of be a little bit more aggressive on this move. And if I wanted to, I could put some break-even stops in, different type of risk management tools to make sure I don't lose anything on this. But right now, everything's looking pretty peachy. So we go up to so the 200% would be the next level up there, 84.6. So right now, those are my levels that I'm kind of looking at. I can mark this as the target too, since I didn't. There we go. So those are my next 4 targets on the 4 hour. So looking good. I like the way the structure's going, but I got to put a big but in here because this is the hourly and the 4 hour. So when you go to the but is the daily has not went bull yet. So to me, there is that risk in that hour and that 4 hour, and that's why risk management will come into play. So if this starts to come back down, you might want to lock in some of your profits or break even or something along those lines. But what I'd like to see is the daily starting to kick into the bull zone. And right now we're looking at 66,236 at the moment to get to the market. So we got to get another 6,000, almost 7,000 higher to get this thing back going bull on the daily. And I think Chris probably has something along those lines too, where you got to get up to a certain level to kind of get us flipping back into a little bit more of a bullish mentality. But I do like the way the hour and the 4 hours are setting up. And hopefully that brings in buying interest to bring this daily back up and get us back into the bull zone. So the way I'm looking at the daily at the moment is, since we're in the bear zone, the 127 to 141 range at the moment is between 41.9 and 45.1. And the start of my threshold back here is inside that zone. So that's going to be my buy area or my target while in the bear zone. So if this thing starts to roll over again, 43-ish is going to be the area that I would be looking to buy while in the bear zone for the daily. But for now, I don't have I think I had some other ones still on there from a while back. Yeah, because on the dip that we had, I had areas to buy on the daily also on the downside. So I do have longs on here that I got to definitely keep an eye on that. So, but right now, in the money. But again, risk management. Make sure you keep watching that so you don't lose out on it. But that's where I'm at on daily. I wish I would have liked to seen a little bit more of a push higher and get us into the bull zone. But patience is always key. When I say patience is just what would I say, like a strategic advantage. Like the market rewards those who wait for the right opportunities rather than chasing every chance you see.
Exactly.
And that's what I'm kind of doing with this daily, is kind of waiting and not jumping in just because the hour and 4 hour are long at the moment. That's the daily. Let's go on to the weekly. This is where, from the way I look at things, from a macro perspective and my threshold theory and just my own personal analyzing, I think the low's in. Now, that's, like we got to go back to the risk management. There is a line in the sand. And if it breaks down, then of course you're going to go back to the drawing board. We're going to flip our mindset to a little bit more of a larger bearish move, those kind of things. But right now, the way I look at things and the way I analyze things, I think the low is in on this low that we saw here as it came down and we had this buying interest come back into the market. The shallow fib was at 53,411. Of course, it wicked down, but it came back up out of that. And the bull zone stayed intact. So all of that together, along with a lot of other things that I'm not going to go into, but it's a lot of timing charts and a lot of other stuff. But I'll show you a couple things. But I like that the low is in here, and I think this will start to help us push up from a long-term perspective. But not that we can't correct back a little bit here, but overall, I think that we can still start making a new high here in the next month, next couple of weeks into the next month. And then we can kind of push and pressure these previous highs. So I'm going to break down this weekly a little bit more. And this is one of them I actually shared out on Twitter on a video I did for my group. But I just want to kind of highlight it because I think it's kind of interesting. But there's a bunch on this chart. But the main things I want to point out is, first of all, these trend lines, and then we had the trend line break, and you take the rate of change there. As you can see, this one worked up to this point and hit the target right here, but it actually wicked up and actually hit the 61.8% level, and then started to come down, and then broke the 38.2% level to the downside here, hit the 61.8% level, came back up, and then hit this as resistance. And then it came down and settled 3 times underneath the 61.8% level, which opened up a full retracement opportunity. This did actually rally back up, but it did not break this as resistance. And then it worked its way down and wicked down to this point, and then came back up into these dotted lines that I have. And I'll show you what I mean there as we look forward here. But another thing to look at is the high to the low here. When you look at these extensions, the extension here was at 36 to 53. And then once this broke the new high, you take the fib extensions, and this 300 to 500 range is inside this 2 to 300. And as you can see, once it's rallied up, it hit into this area. Of course, it went a little higher here. But if you're looking at this range, it went up into this range, came up, came back down, and then we kind of traded in this area and kind of got into this kind of a little bit of an ending diagonal here, I guess.
Yeah.
And then it started to break down and then came back down. But this pattern here is what I'm watching. Now, this one went straight up and then came back down and then retraced all the way back down to the break point right here. And this is off of this level. And the reason I take the fibs from here is based on my threshold theory back on certain levels here. When it comes to the different zones, I just didn't put them on here because it's hard to see when you put more indicators and stuff on here. But then then this break to the upside came back up. Now let's look at this next pattern. We had this trend line break to the downside, or this trend line, and then it broke to the upside here. Taking the rate of change, it worked its way right up. This one actually went to the 61.8% level. It went up, came back down, and retested, which I think this is the kind of environment we're at the moment when you look back at some of these other ones that were breaking and coming back. And this is where I think we could find some buying interest to start lifting this up. So that's kind of where we're at the moment. Then it popped up, and then the objective there hit the 61.8% level and then came back down, and then broke out to the upside and made a new high. But now this is what I'm kind of looking at. So this scenario here was more of a straight up and needed a much larger correction. This has been a nice stair step all the way to the upside here.
Yeah.
And if you look at the dotted lines here, and not that this is perfect, but I like the way this is looking, because we went to the 61.8% level, came up, and then this level here at the 61.8% level is kind of the area where we found the buying interest here off of this target. And you got the same thing back here. Once it got above this level here, this was a breakout level. And then this area right in here is also hopefully the bottom, and then this lifts this up into a breakout. Now the throw down here below this line, just like this here, finding that accumulation or that reaccumulation, or it depends on what time frame you're looking at. But I like the buying interest that's coming off of this, just like it is on this one. And since the way I analyze things in my thresholds, and this looks like the lows in and it's starting to pop up, I can see us breaking out to the upside here. And then you look at some of these extensions. So if you look at the high here to the low, you got an extension here between 200 and 300. And then if it breaks the new high here, then that extension gives us the range between the 300 and 500. Sort of like what happened back here. You had the 200 to 300 range, and then it went up into the 300 to 500 range. So when this breaks out, and not that this would happen overnight, but if this breaks out, you're looking at this 123 to 172, which if you look back on a few other times that I've met up with Chris there on Fridays, and I showed you some of those long-term charts, I got a couple different timing charts of 125. I got a couple at 140, which all matches nicely in this zone. So if we can get up to this point and this lows in and we start to break to the upside, then that next leg to the upside should put us in this range. Now it's a really large range, but the overall is direction. The direction is going in the way that we want to see. And then lastly, when I pulled up the 21-day, and you can kind of look at it on the monthly too. If you look back at all these halvings, I was just looking at when this kind of trend line breaks here. You go about 5 bars in, or about 5 months in, and then this one broke to the upside. Now this one broke out and then came back down and retested, but this low right here was 5 bars in and then started to take off on a nice run. Now, if you see where we're at the moment, we're in this 5th bar right now. So if this is going to kind of hold this 5 bars beyond the halvings, this is the month that we should break out to the upside. And right now, so based on the lows that I'm seeing on the weekly and that buying interest coming in and seeing these patterns happen, this could be the month that we can get back above 73K, later this month. And we're only on what, the 9th of the month.
Yep.
We still got 2-3 weeks to go through, so we'll kind of keep an eye on that. So not that this is guaranteed by any means, but the way I analyze, I'm not a person that kind of likes to, search out bottoms and tops, but from the pattern that I'm looking at, I feel like the bottom could be in on this weekly here, where buying interest is coming in based on my threshold theory. So that's where I'm at on BTC. So hopefully that all makes sense. I know there's a lot there. If you have any questions, just DM me. I'll try to get back to you. But I know there's a lot going on this. So I'm sure Chris has a nice Bitcoin chart to go along with all of this.
Yeah.
Any questions, comments on that, Chris? Or
no, man, I like it. I even like your pullback. If it were to break down lower, I'm going to show you right here that's actually my target as well.
Okay.
So those that have been following me since the bear market low, this chart here might look familiar. I finally got around, we'd had already done up all through here, and then I got around just recently to updating it in this area. I've posted it on Twitter, so if you follow me there, you can, check the copy out there for yourself. But basically, this goes through a lot of explanations of the ranges, the volume, the price action analysis, accumulation, reaccumulation. This up here, again, is also looking to be reaccumulation up here right now. Real quick here, big thing is, the idea is that we've got potentially a 1 and a 2, a 3 and a 4 here, which you can't really see with that. There we go. And then we get a 5. So we're going to go into some backing down, but basically based on the height of wave 4 here, from the highest point to the lowest point, the 1618 retracement, gets us up here around 94,500. As I put here, said wave 5 target based on the height of wave 4, but will likely overextend much higher. Okay. And so we'll talk about that in a minute here. And you'll see also that Fibo's range on his upside there also looks pretty good with what I'm looking at here. But we get over here. Here's the big thing, which you guys should be looking at here. So we've got, now you can draw it like Fibo had it there, and like I've drawn it as well, where it has this descending, broadening wedge, something like this here. And you have this throw under of the wedge here. A nice wick closes back up. So that's usually something we want to see. And when you have a throw under of a wedge or a throw over of a wedge to the top of it, if it's heading upward, what you expect to see is a strong reaction. And that's what we got right here. We've got a very sharp reaction. And so that kind of adds a bit of confidence to the idea that this descending, broadening wedge, that was the bottom there. That was a throw under, and we should be continuing to break out. So that's the first thing we look at. Some other things going on here. This is a range. Okay, this is a range. You'll notice throughout this range, overall volume coming down, right? No exceptional volume anywhere in the range as the 4 months, almost 5 months has played out. Volume has just generally gotten lower and lower and lower. Now you can see it starts picking up at this previous swing low. So if you're looking at the average volume here, you have some spikes around the same area, but overall volume is kind of staying lower here, and then you see it building up in this area here, which tells you the market's getting active, right? It shows you the market's getting active. And so what happens is you have this range, and then you have a big candle with big volume spike. It's the only volume spike we've seen at all. It's bigger than everything prior to where maybe around March here. Maybe not. Let me see. No, it looks like more volume than that. Since back over here around the FTX. Yeah, so this entire rally up, the FTX reaction here has been the only thing. This is the Bitstamp Bitcoin USD chart. But this is the second highest volume since that FTX collapse. Okay? So significant, especially because in the range, there was no, we weren't seeing this coming down. We weren't seeing volume, like this nice expansion of volume, something like you might see here, where you see this expansion here. We aren't seeing that here. We're getting this just basically coming all down. And then we got a little bit of spike right here as we started breaking down through the mid-range, the EQ of the range. And then it drops back off, and then we have a big spike of volume at the bottom. So I tell you this because what happens is when you have a range where volume isn't really going anywhere, then you have a big candle with big volume that breaks down below it. And then that candle leaves a long lower wick. That's usually this candle looking like this with a large lower wick, large candle, volume that's beyond anything close to it in the range. After the range has just been like minimal volume. Usually, most of the time, we'll suggest that this is a shakeout. Okay, so that's what I'm getting around to saying, that would be a shakeout. Now, if we had seen volume again doing something like this one here, so you saw this expansion of volume all the way up into this, no real spike at the bottom here, and you saw it closing toward the lows, then you could say, okay, this is probably distribution heading in here. But right now, it appears to be a shakeout. We still need higher. So here's what concerns me at first. This looks like 3 waves up to the pivot, okay? This third wave is almost the same size as this first wave. And usually if it's corrective, an Elliott wave, this would be an A, a B, and a C. And your C wave is usually 100 to 123.6% of wave A. So we're almost at 100% of wave A here. So what does that mean? That means this could be corrective. And if this is corrective, what does that mean? That means we would break down below this swing low here. So not Monday, Tuesday, but Wednesday swing low on this chart. That's 54,568. So if we're to come down and break down below that, that suggests this is corrective, and we're much more likely to break down further. Now, if we break down further, this is still a wave 4. You can notice right here, we hit the 38.2 retracement. That's our first target for wave 4. So we hit that area, rally back up. If it came back down, we'd be looking at 50%. That's our secondary target of a wave 4 at 42,883 or so. So if Fibo was talking about his downside target, that puts it right there inside that target range. So yeah, so I agree. I like that that's there. But until we break down, I wouldn't be thinking about lower until we actually get below Monday, Tuesday, Wednesday swing low there. As long as we stay above that, here's the thing. As long as we stay above that and we break out higher, that keeps this whole thing alive. That doesn't, that suggests that maybe we're going to be getting higher there, right? Because if this is a 1, we got a flat here for a 2, then on this chart, wave 3 has a minimum expected target of 68,333. Wave 5 at 72,042. And as you can see, that puts us just prior to the all-time high. Now, there's some things about that. On Elliott wave, generally you expect 5 waves up from your swing low to terminate around the previous swing high, maybe a little below, maybe a little bit above, but right around that area. So if this count plays out, we get a 3, 4, 5, that's going to do that. Now, the big thing about this when it comes to pivots is we like to see that if we're coming from below and breaking out above the pivot, we like to see that wave 4 pulls back and tests the pivot as support, which is what it would do right here, the 100%. So go to the 1618, pull back to the 100%, and then to the 200%. And then that gives us 5 waves up for 1. And then wave 2 will usually pull back to wave 4, which would be, again, right around the pivot. So if we're looking at pivots and Elliott wave, that's generally what we look for when it goes through, right? Again, this is stuff I've never seen anybody teach this in terms of pivots or Elliott wave, using them together. I've never seen anybody teach this. I'm the only one that I've seen ever teach this. But it's really important. It's something significant that I learned many years ago and has continued to work out really well. So what does this mean? This means what I want to see is an impulsive breakout and close on the daily above the daily pivot. If we can get that, that increases confidence that this low is probably the low. We're going to head up higher. The other way to look at this is in terms of market structure. We have a high, a low, a lower high, a lower low, a lower high, now a lower low. This is what we call bearish market structure because it has lower highs and lower lows. But we break that bearish market structure if we break out. We don't have to close above. We just have to break out above the last lower high. That's this one right here on this chart. That's $70,016. So if we can just get 1 penny above that, that breaks this bearish market structure. Okay. And at that point, we're now in bullish market structure off this swing low. And so, again, these are all the different ways you can look at this, right? This is all the stuff that I teach every week at Texas West Capital in our group coaching. But these are all the different ways you can look at this, whether it's Wyckoff with the range and the price action and volume, whether it's Elliott wave with count and what we expect, whether it's pivots in what we expect here. So all that being said, here's the clean picture. Now, if I'm just trading pivots and I see if we get, I'm looking for a rejection here. Often we get a rejection of the pivot, pull back to the S1, and then we look for the impulsive breakout. So everything else that I've just set aside, these is really what it comes down to. Do we just go ahead and break out impulsively and close above that daily pivot, or do we pull back? And if we pull back generically, I want to look toward this S1 pivot area. You can see we have this order block on the daily here. So I would see if we're going to continue pulling back, generically speaking on the daily here, I want to see us bounce or reverse around this S1 pivot. And if we can do that and then break out above this swing high here and close above it, that should indicate, again, that move would indicate that the low is likely in. So there's all these different ways we can look at this. Market structure, of course, being the other one I just talked about, where we can look at this and what's going on to suggest that, maybe that bottom is likely in. I'm of the belief that this is probably the bottom. But again, as I tell you guys, as I tell you all the time, what I think doesn't mean a damn thing. I at the time, based on the structure, whatever, we were over here, a week and a half ago, I put the odds of us breaking down pretty low. But I had a plan, right? If it broke down, we were looking at the 38.2 retracement with this potential count, and we stopped just prior to that. So don't worry so much what Fibo and I think longer term, right? What we think really doesn't matter. The market doesn't care what we think. The chart doesn't care what we think. We have our opinions based on the structure and the way we trade, but that doesn't mean they have to come true. And neither one of us sits in there thinking that we're definitely going to be right. We say, listen, this is what it looks like based on the way we trade, and it's probably going to do that. But if it doesn't, here's the plan, right? You already heard Fibo talking about the different time frames and the targets and the bear zone, the bull zone, depending on what you're looking about, okay? So I think that's really important to say right there before we go on here with some more charts, Fibo.
No, I think it's great. No,
because new traders usually get caught up in that. You know, you've been doing it 20 plus years. I've been doing this 30 years this year. And they want to go, okay, you've been doing it a long time. You've been successful. So yeah, I'm going to believe what you say. Well, yeah, but you don't want to believe it as if it's the God's honest only thing that's going to happen and that we can't possibly be wrong, because we're wrong lots of times. It's risk management. It's understanding what we're doing that saves us when we're wrong. So, you know, I want, if you're a newer trader in here and you haven't figured it out yet, you know, how to be consistently profitable trading, just understand whether it's myself or Fibo or anybody else out there, we have our opinions, but our opinions don't mean squat at the end of the day. We're going to be wrong a lot of times. What's important is understanding how do you protect yourself if you take a trade a specific way. And that's why, you know, everything I do over there at Texas West Capital focuses around risk management. That's why I tell you guys every time here, the only thing you control is how much you lose. It's absolutely it, because if you don't protect yourself in how you enter and how you exit and whatnot, like Fibo's is a different way, right? The way that Fibo does it is based on the size of his entries. And then, you know, so he doesn't, you know, like a lot of y'all, you're going to go in full in. Fibo never goes in full in on a position. He does 10% at a time. So he's always protecting himself in case the trade goes against him. He doesn't do his risk management the exact same way I do, but his risk management is in there. And this is really important for y'all to understand. However you trade, you have to figure out the risk management that works and go with it, okay? So anyway, all that to say, I like what we're looking at here. The weekly's really looking kind of... Oh, real quick here. The other thing about the daily. You see how we closed this July 5th swing low here? You see how we closed above it with this wick down below it? This is called a bullish SFP, bullish swing failure pattern. And so we got this nice move up. Better yet is that the 3-day did that as well. And the 3-day closed above that S1 pivot, which says that S1 pivot held this support. Again, large lower wick, large volume. Also, 3-day closed in the range, back up in the range. So this becomes what appears to be potentially just a spring here before we're rallying up. So there's a lot of different ways to look at it, a lot of things going on here that say maybe that bottom may be in, but we want to see some more movement up. And, you know, I've given you a few things here. Impulsively break out and close above the daily pivot, breaking out above that last lower high at 70,016 on this chart. If you're looking at Elliott wave as a wave 4 here, we have to break above wave X, which was not the last, but the previous lower high here at 71,949 on this chart. It's around 71,700 to 72,000, depending on what chart you're looking at, but it's that swing high there. So however you're looking at the chart, however you're looking at it, this macro, this bigger picture here, you have different levels that you can look at and different ways to look at it to suggest maybe that bottom maybe, and to give you some confirmation there when you're doing it, okay? So that's what I've got there. Waiting to see how this weekly closes. The weekly looks really good at the moment.
No,
you can see here on the weekly pivots, guys, look at this. Came in sideways with the pivot, the R1 all the way up. What was that?
Oh, no, go ahead. Sorry.
Oh. Anyway, really all the way up, almost to the R3 pivot. And all we've really done is just kind of range here between the R1 and halfway up to the R3. We dipped down just below here. You'll notice, look where we caught a bid, right above the previous resistance. So definitely expected. This is pretty bullish market structure here on pivots. And usually this move like this and then this little slight pullback here usually indicates you're going to run through the R5 pivot, which gives you 116, 117,000 target at least. That's right. The final thing I wanted to talk about real quick here. So I said wave 5 target based on the height of wave 4 is up there around 94.5. here's the thing. The expectation is to get 5 waves up around the all-time high and then pull back. And so if we do that, let's say, let me just kind of throw it in here real quick so we can move on. But if we get, say, 5 waves up here and then, pull back toward there. Well, now 5 waves up gets us at least at $132,460. Again, puts us in Fibo's range there. And that's without a blow off top. So if you expect a blow off top, you could expect that to potentially even hit 166, maybe even 242 as it continues to go up there. So again, even though the minimum target there is expected to be 94.5 based on the height, if we continue up from here, right? If we don't break down any lower, there's still that possibility that we get that, we'll head up higher there. All right, guys. So that's where we're looking at on these charts. There's the different ways you can look at it. None of this is ultra just blindly bullish. The warning is here, a potentially 3-wave rally here. So breaking down below that, Wednesday swing low, which suggests we're probably going to head lower. And again, that gives us that 42,880 target here on this chart. Gets us down to that range on Fibo's chart there, guys. Okay. So there, I've done that. Fibo, jump in there, grab your other charts, man. We can go with it.
A shakeout in trading is the market's way of testing resolve. So those who withstand the turbulence are often the ones who reap the rewards. I found an old quote that I had on one of my, I got a bunch of freaking notes and everything that over the years, sometimes are kind of fun to pull out. But yeah, I mean, shakeouts are rough, but I mean, if that holds the way it's supposed to, things look pretty good. And I do like the daily and the 3-day, closing back up into the range. All of that together, it doesn't mean that it's guaranteed, but there's certain boxes you check, and there's boxes that are being checked. And the more boxes you can check, the stronger, it's likely to be. But again, no guarantee. And that's why we have risk management plans. All right, let's go on to next one I was looking at was Ethereum. Ethereum has not went back into the bull zone yet, but just like BTC, I had a couple of buys on the downside here. My first target hit at 26.46, and then it bought, and then it popped back up, and then it just got absolutely demolished. But then it went straight down to my second target, which is inside this range between 2051 and 2254. But the target was actually right around 2169. And that one wicked down and hit. So the two of these together, just like I did on BTC, I just averaged those out, and you're averaged in here. Typically what I would do is buying like that. I would, and if it failed the bear zone here, I would have sold at the shallow fib and took that profit, because that shallow fib is now resistance with downside still being a possibility. The only reason I held on to it was that my overall exposure with what I have on in positions right now, I'm willing to take the risk because I really don't have a lot on at the moment. I've been more kind of in a wait and hold mode. Just waiting for the market to get back to where I would want to get back into the market. And right now, with all of this waiting and being patient, I didn't have to get out. I'm willing to take that risk because I still feel like that last leg down had a lot of buying interest that I saw on some of my momentum models. Yeah. And I decided just to hold it. But if you were normally doing it, buying it down here, you would have sold out here for profit, and then you'd be waiting for a much. I don't even have the 200% in here. I don't have it on here because the reason I have it like this, because you got to go so far back into history here to get this zone, and that's where this comes from. That's where this previous low inside this zone is where that buy was, but then the 200% is way down there at 1204. So for me, for me, these two buys that I have here in this average, if we get 3 settles underneath this 2650, or no, 2050, 2050, then I'm out, take the loss, and then we're on a much larger move to the downside. So I'm just kind of willing to take the risk because I just have small exposure. And if I ended up taking the loss, and it's not going to be that huge of a loss, of course I don't want to lose, but if that happens, then I'm going to be even in a much longer wait and hold pattern for buying while in the bear zone. But right now everything's kind of holding out pretty good. I wish it would have gotten to the bull zone though; it would have been a lot more comfortable. But I mean, the ADX is dropping. The directional index lines are all tangling up. So to me, that's a little bit more signs of consolidation. So we could actually, kind of remain in this area here and just kind of maintain that structure, kind of waiting for the other markets to kind of get some buying interest in, and maybe we'll get some buying interest in here too. But two buys in the bear zone and long, just like I showed before. These are the two that I had buying there, so I'm just kind of holding them out. I have a 3,000 and 3507 target, but and that just comes from, if we do hit the bull zone, this will be a target up here. There's some other ways of measuring that, but right now I'm just kind of waiting for the bull zone before I even get into that. But that's where I'm at on the 4 hour. Daily, same thing. Went into the bear zone, nowhere near the bull zone yet. I did hit this target at the 2488 here, which came from a threshold which was just at the bottom of this range, which got me filled on that large candle to the upside. But now I'm kind of breathing a little bit above where I'm at. But again, it's the same kind of thing. I'm just holding and waiting it out to see if this thing can get some buying interest. But the way this is structured at the moment, the next target down there is at 1873 on the 200%. If this thing wants to continue to the downside while it's in the bear zone, so I'll keep an eye on that. But then 2488 here, just like on my risk management on the other things, 3 settles underneath that, I'll get out. And sometimes it's not the 3 settles is not set in stone. It's a major guideline, but it's not a major rule. So in other words, if we get a wick down that closes maybe 3% or more on the downside, so if it breaks that 2488 and just goes down and settles like 3% or maybe 5% lower, I might just get out and not wait for the 3 settles. And again, it also comes into your overall book, how much you're risking, where you at, that kind of thing. But my main rule is 3 settles, and that's usually what I would go with. But it all depends on how overexposed I am, or not overexposed, but if you get to a certain exposure level, you might want to be getting out before the 3 settles because you don't want to take on that additional risk. But that all comes in your risk management, and everybody has different risk tolerance. Part of my day job is measuring people's risk tolerance with my clients, and they could range from who knows what. So depending on what that risk tolerance is, you want to build that risk management plan around what your tolerance is, and that'll help reduce the emotion when you're getting in and out of markets.
Yeah.
That's what I got for ETH. I can just go through what I have. If
go ahead, man. Yeah. Go
ahead. Gold, not much. Been waiting. I think it's about to go bull here. And we got about an hour and 17 minutes. This last time, it looks like it went bull, but it didn't. When you look at the numbers, it went up to a 59.98 on the RSI, and I needed it to be 60.16. So it held. But this next leg up here might get us back into the bull zone. We're already well above the shallow fib. So if this actually clicks into the bull zone here in the next hour and 17 minutes on the close, I'll buy it. And then the target would be 25.14, which would be the 200% up here if that happens. But again, we still got an hour. Might not do it, but we'll have to kind of wait that out. And the nice thing with this is if it actually clicks into this and buys, and I buy the 4 hour, the daily still bull. So overall on gold for the daily, I've been out. I haven't had any more positions on because I traded it all out and hit that last target on a profit taking here and then it worked its way down, but it didn't go all the way back down to the shallow fib. So people are kind of front running this a little bit, it looks like.
Yeah.
But if the 4 hour goes bull, I'll be comfortable going long, since the daily is still kind of in this bullish structure as it's trying to work its way up. So for me, on the daily, I'm not doing much but waiting to see if we can get a shallow fib here. If you get 3 settles above 24.52, you can get back long again. I might do that if depending on how exposed I am on some other stuff, but I like that it's in the bull zone and the 4 hours getting ready to click there. So kind of like that as a possible long on the 4 hour. If you go into the dollar still bear zone. Not a lot here. It actually tried to get some bullish momentum here and didn't get anywhere close to going back into bull. So to me, the dollar is still relatively bearish going forward here. I didn't get anything bought. My target inside the zone while in the bear zone was all the way down at 101.81. I didn't get it on this one. If it works its way down here, I'll have to kind of keep an eye on it, because it might actually go further than that if it gets kind of ugly. But right now, that's the target I'm looking at to buy while in the bear zone, which didn't hit. But for me, as the price comes down to this area, if the momentum starts to build for the bears as the price comes down to here, then I might wait. But if it comes down to this target and it still looks like the bulls want to keep some kind of structure, then I'll probably buy it to go long on it. But for the dollar, I'm really not interested in it at the moment, so I really haven't been doing much with it. But if you look at the daily, same kind of thing, didn't make the target on the downside, still well into the bear zone. So I still like a lot of downside in the dollar. So if you want, I don't follow correlations, but if it wants to correlate and the dollar is going to crash here, then maybe some of those riskier assets like Bitcoin and some of these other could find some buying interest, start popping us up to the upside, but we'll have to see. SPY in the bear zone, I've been either waiting for a much larger target to the downside, which was just above 5,000 at the 200% here while we're in this bear zone. I didn't do anything with buying in here. I could have, but I didn't. I just wasn't around to mess with it. So I just said, you know what, I'm going to take a back seat. If it gets all the way down to this target, I'll buy while in the bear zone, or I'll wait for a new bull zone, which it's trying to get to. We're looking at 54.23 to be that area that would be it. So if it gets up to that point, settles the 4 hour candle on that, we're already 3 settles above this shallow fib. So if it clicks bull, it'll be a long for me on SPY. And then same thing on the daily. Missed my target because I had a limit order in here. Missed my target by just a little bit, which kind of sucks, but
happens sometimes though. Right?
Yeah, it happens. But I'm not going to chase it either. So
yeah, exactly.
So since I missed it, I'll keep an eye on this, because if it starts to come back down, since I missed it by a little bit there, and if it starts to go through there, it might be more of a downside than I'm expecting. So I'll be watching some momentum indicators if it comes back down to test that point, or a new bull zone. We're already 1 settle above the shallow fib. So if we can stay above this and kind of keep trending up to the upside, let me see where that's at. I don't have it open here. The bull zone here is at 57.51. So that still got a little ways to go before I even consider it.
Yeah.
So I'm going to be on a back seat on the SPY here for a while, since they're both in the bear zone. Could be a 1, 2, 3, 4. It could be a 5th wave to the downside. Who knows? It's good to kind of watch that, but not much going on there. Since I'm looking at the indexes, let me look over at the NASDAQ. That one actually hit my target down here, hit perfectly on the 141 here at 17,320, and then popped up from there while in the bear zone. So that would be that first buy spot. And then the sell was the shallow fib at 18,318. So in, out, already done. And now it's either a break to the downside all the way down to the target at the 200% at 15,802, which would be a pretty large move to the downside. But for me, I'm just going to be patient and wait for that, or wait for a new bull zone going forward. So the same kind of thing, same way I'm approaching that. is the same way I'm approaching the SPY. The only thing different with this one is the target actually hit on the NASDAQ, and then actually hit the shallow fib for the quick trade. But and then the other one was the looking at the Nikkei. This one actually hit two targets, just sort of like the BTC and the ETH. Hit the first target on the downside well in the bear zone right here, and then it went crazy all the way to the downside. Then my second target hit here on this previous low within this in the zone here between 31,790 and 32,870. That was filled and that was filled. So you're looking at the same kind of thing. You're averaged inside of here, and then working to the. I did not buy this, but if you were doing it, that's how you would approach it. You'd be in here long. Most likely, if you bought this, you would have sold it at the shallow fib for the quick trade, and then your other one would be right here, and you'd be pretty much break even on that one. But I'm not in it, but that's how you would have approached it. For me, I'm going to also just wait for a much larger downside or a new bull zone. That's the way I would approach it on this one. So, but same kind of thing. We're already 3 settles above the shallow fib. So you never know. We could start to get some buying interest in here, but overall, it's still to the downside.
Yeah, and I'm looking at the chart there, and I can count 1, 2, 3, 4, 5 waves down before the biggish green one up, and then the big move down. So I'm looking at that going, man, that swing high up there just above your 100%.
Yep.
On the move down. Yeah, right there. For me, that looks like 5 waves down there and then up, and then you got 5. So it looks like an ABC right now. Yep. Now it could be, this could be wave 4 pulling back. But if you break above that point right there, whatever that level is, that should indicate that you're going to break out higher.
Yeah, the 39,285. Yeah, because right now this could be a 1 with a 2, right? Yeah. Possibly, and then working its way to the upside. Or am I looking at it wrong?
Yeah, no, I'm looking at it 1 down to the swing low just before that, and then pulling up to that point is a second wave, and then the third wave is the three candles down.
Yeah, I got you.
Yeah. So for me, it looks like it's an ABC, and that swing high that you just said there, if that's 3 waves down ABC, then breaking up above that should indicate that that's corrective. Yep. And then I personally would be looking to long for new highs above the 42.5, 45 or whatever they're at the swing high. Yeah,
so that would give us the signal that we'd be in a new impulse wave to the upside.
Yeah, that's what I would be looking for. Yeah.
Okay, cool. Yeah, I'm pretty similar, so it's kind of a little bit of a hold and wait there. The other ones I had, Solana. Solana went into the bear zone back on the end of July. Worked its way down, got all the way to the zone here between 112 and 97, or 112.97 to 121.09. The target hit. It actually traded just below it, so no 3 settles underneath us to stop us out. So it was a buy. Actually, there was 2 buys, just like everything else. There was a buy here, and then there was a buy here, and then you average out, and then my stop would be underneath the 112. And then if that happened, then I'd be waiting for 79, which is the 200%. But this has held, worked its way up, has not went into the bull zone yet. So if you're long in here, you could actually, take some profit off of one of them. So if you're 20% long, you could take profit and only be 10% long. Depends on what kind of exposure you want. But right now, it did not go back into the bull zone just yet. The momentum is really not there for either trend. So maybe it's going to consolidate in here a little bit. And then since the found a little bit of a reversal in the area I like to see where reversals happen, this could actually come back down a little bit. But I'd like to see a new bull zone, and then I'll be back long again, or more long, going that direction. So, and another thing is you're seeing the same kind of pattern on this. You get this trend line break.
Yep.
You come back and you get a little bit of a throwback. I like seeing that also. So that gives me some confidence to say if you're long down in this area, you kind of want to hold that exposure because your possibility of breaking out to the upside here is looking pretty good. Just not in the bull zone yet for what I look at, but I'm sure there's a lot of other ways of looking at it to where this looks pretty bullish. It's just mine is a little bit more conservative. I'm just kind of waiting it out. But I like the bullish structure that I'm seeing there on Solana. Link is kind of doing the same thing. Didn't get back up into the bull zone yet. Hit the zone here. But it hit the zone right here, had 1, 2, and then the third settle was back up above it. So I'm not in this, but you would have bought in this zone right in here for a reversal. So as you see here, it definitely went down way below this level, but it came back up. And then when it came back down, it hit this as the support. So that to me was a nice little sign of a possible reversal here, as we're looking at this as our guide going this way. But for me, again, momentum is real light as it's trying to build that bullish structure. So I'm looking for a bull zone. We'll probably consolidate in here. Hopefully we'll get a move back to the upside. But again, a lot of these alts for me have moved pretty significantly from the bottom.
Yeah.
But the way my system's built, and of course, it's just not meant for finding bottoms. It's more of establishing a trend before I'm more confident getting in. And then, I might miss the bottom third, but I'm going to make pretty good on the top 2/3, hopefully, on the way to the upside, or at least in and out on the way up. So for me, a lot of these alts really aren't bullish yet from the way I look at it, but I do like the structure that's being built that could possibly get us going here. So depending on how you approach this, you definitely can find some possibilities to the upside. It's just mine's a little bit more conservative. Two more charts to go here. Coin on Coinbase, bear zone here on this one, working its way down. I've been looking to see possibly buying at 137 is the downside target, or of course a new bull zone. So for me, we had this bull zone here, which I'm sure hit some targets. I just don't have it drawn on here. And then we've been on this slight move to the downside, went into the bear zone. So I'm just kind of waiting and holding on this one, waiting to see if I buy 137 or a new bull zone. And I don't have the number. I don't have the indicator on there to see what the level would be, but I would assume that it would be at least 227 or so to get us back into that bull zone, which is at 100% from the threshold there, to at least get us back above that level. And then on micro strategies, I'm going through this quick because I'm running out of time, but micro strategies here, same thing, went into the bear zone. This one actually hit the target in the zone here between 111 and 118. I did not buy that. So I'm more looking for that much larger correction. And this kind of goes with the SPY and some of those still being negative on the daily, or at least bearish on the daily for me. So that's why I've been kind of just sitting back and waiting for those much larger corrections before I buy in the bear zone on these types of deals. But that first target holding and working its way up, maybe we start to get that structure going. But for me, it's still unfortunately, it's not. It's swing trading and kind of waiting. A lot of people that like to do the hourly and smaller time frames, you can gain a lot more when you go into the smaller time frames if you want to do more of that day trading. That's just not for me. So I'm a little bit more of establishing the trend and getting into the trend while it's establishing versus trying to find that exact bottom. So that's kind of where I'm at on my charts. So what you got, Chris, before we sign off here? At least me signing off. You might stay on for a little longer.
Well, nothing really. Let me see here.
I know there was a lot of charts at one time, but hopefully people are getting some good information out of it.
Yeah, no, I want to bring up the VIX here because the VIX spiked up to the third highest time ever there on Monday, way up here. And then what you'll notice is it's continued to break down. So we spiked up here to around whatever this is up here. What is this? 43 or so on here. And then we're now down to 21 and a half, coming back down here. If we zoom out a bit here, this is kind of, let me get rid of the overlay there. I mean, this is what the VIX looks like. So, again, very significant move, breaking through all that downside resistance. But, again, it had been dormant basically for so long there. People just became really complacent. I think that played a lot more into it than anything else. People just believing it's not going to change. And then, of course, we got the change, right? And it caught a lot of people off guard. And so, you had the VIX shoot up there. Now, there is an interesting chart that one of my followers posted. Let me see if I can find it here real quick. It's Bitcoin versus the VIX.
Yeah, I saw that when you posted that. I thought that was pretty interesting. I never really looked at it that way. It was kind of an interesting chart.
All right, you know what? Yeah, I can't find it here at the moment, so I'm just going to toss it together here real quick. We'll just put this here. And so you just do Bitcoin, BTC, USD / VIX. And then don't hit anything here. Just hit the enter key.
Yep.
This is what it is. I'll zoom this out to the weekly here. A little bit easier to see. And so what you kind of notice here is that right there. And so I had never looked at it this way. And so this is what's so great about finding the right people to follow and the right people to follow you. This is interesting. This is Bitcoin versus the VIX. Now, we know the VIX is just basically options volatility there around based on the S&P. So anybody that doesn't know, that's what the VIX is. Just a really quick, easy way of saying it.
Yeah, I was going to say, it's a lot more than that, but yeah, I get it.
A lot more than that, but basically, I want
very
to understand it's based on options related to the S&P is what it's based on. But what's interesting here, again, is when we compare the Bitcoin to the VIX, you can see that we had this pullback here in October of 22. Again, right around that level, March of 23. Again, here, October of 23. And here we are again, just recently, all still finding this same line that started back here around March of 20 during the COVID low. So I like that. I like when you see that same level continues to hold. So that, that has me interested. And so it was a great chart. I wish I could remember the person's name. But if you follow me on Twitter, you can look at my feed. I think it's probably maybe 2 days ago that I retweeted it. And you'll be able to find their @ on there if you follow them as well. But anyway, it was a good, I think it was a really good chart to show. Just really kind of interesting. If we look at, I don't even know if we pull back here how this looks, but
yeah, I found it. It's Tony the Bull Severino. He's a chartered market technician. So that's the guy's name that actually had the BTC USD VIX chart. Tony the Bull Severino. Yeah, I just looked it up. I shared it too because I thought it was yeah, for sure.
So anyway, that's what I kind of wanted to show there because I did put that there, and I know some people just come on here and they don't get a chance to follow me on Twitter or whatever. So I wanted to kind of point that out there, that and the VIX itself, and just what's going on there. So I think that's where we're at. Again, end of the day, it looks really constructive so far. But there are, when we're looking at the indexes, when we're looking at Bitcoin, we've both explained a few different ways why it looks constructive. But they still needs to get some further upside, no matter how we're looking at it here, to really kind of give that confirmation. Because we're talking about the daily time frame, guys. We're talking about almost a 5-month range with that heavy volume dip down there, and then right back up. So. A lot of potential positive in there. Just don't get ahead of yourself. Risk management's where it's at, as always, every day. But other than that, we'll keep watching for that follow through higher. And so for me, again, it's basically an impulsive breakout and close on the daily above yesterday's swing high. If we can get that, to me, that does most of the heavy lifting to say the bottom's likely in. And then you just have those more technical. If you have the bearish market structure, and then if you're looking at the WXY correction for wave 4, wave X, around 72,000, those are the more technical levels. But trading pivots, generally we would look for that impulsive breakout and close on the daily above the daily pivot to kind of signal the most likely bottoms in. So,
yep.
Okay.
I'm with you.
There it is. We always appreciate you guys joining in. Thank you so much. As always, hit the like, subscribe, follow us. The tags are down below the video. Fibo is at FiboSwanny on Twitter. He makes it easy. I'm TX West Capital over there. And man, oh man, just keep coming back. Come check us out. You know, you can get in with Fibo's threshold theory. You know, I've got Liquidity Pulse Trading System in there now as well. Plus, we have our group coaching and other things available there. So, depending on how you guys you think you want to learn, right? There's a lot to learn with us, and you can, you know, mix and match and add in and join in and do what you need to do so that you become a better trader. All right. So, Fibo, I appreciate you taking some time out, man. Join you. We'll see if you can get him back here in 2 weeks, guys.
Yep, always a good time. Always a good time. A lot of good alpha today. I like the Bitcoin session we had. That was good stuff.
Yeah, I think it was important just not to let people get running either way. Yeah,
yep, exactly. So, always a pleasure.
There it is. As always, remember the only thing you control is how much you lose. So please keep working on that risk management. And Fibo and I, man, we'll see you guys. Gosh, I guess we'll see you guys next time.
Next time.
All right. Take care, everybody.